Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. All right, in this video, what I'm going to do is talk about the economic data, see how that's impacting the overall markets with some of my market analysis, and then finally wrap it up with some trades that I think I can wrap an option strategy around in order to take advantage of it, high implied volatility or low implied volatility. And we talk about those levers and pulleys in these videos a little bit more so in the webinars that I do on Thursdays at about 4:30 Eastern, I believe it is. I know it's 1:15 Pacific right now. So anyway, going across the pond, let's start looking at some economic data. Great Britain, we got retail sales number coming in at negative 0.2%, expected to be a positive 0.6. Something interesting to note about all the supply chain stuff that's going on right now is the fact that Mattel and other toy makers are flying plastic toys into areas like O'Hare and stuff like that because of the whole supply chain issue. Something to note also, Barbie is back in style for Mattel. They're actually just releasing their earnings, and one of the big upsides to their earnings call was the Barbie aspect. Apparently, there is a lot of Barbie advertising going on right now, and the younger generation is coming back to Barbie. For a long time, Barbie was a drag on Mattel's earnings. All right. So now we got the flash PMI numbers. We talk about this all the time. This is one of the major economic data points I like to look at because it is forward looking. So let's take a look at across the pond. We got European French manufacturing PMI. This is their flash estimates. This is the main one that they're going to be looking for. And that number came in at 53.5, expected to be 53.9. So a slight miss on that. Remember, France and Germany are the big manufacturing sectors of the European region. So French service PMI coming in at 56.6, higher than the expected 55.6. Flash PMI for German manufacturing, 58, higher than the expected 56. Services, 52.5. Expected to be 55. Then the broader European region, we got the manufacturing PMI number coming in higher than expected at 58.5, expected to be 57. Services a little bit lower than expected across the board here, and seeing it show up again in this reading at 54.7, expected to be 57. Great Britain's manufacturing PMI coming in at 57.7, expected to be 56. Services 58, expected to be 54. All right, all of those numbers, anything above 50 is expansion in the economy. That's a good thing to see. The only thing that we really missed on were a couple of those economic data points on the PMI numbers. They were only missing by a couple of tenths, so that's not something major that's going to be really hurting the economy. We think that we're still expanding because it's above 50. So those all levers and pulleys looking good. Now here in the United States, we did get our flash PMI. Keep in mind, we're going to be waiting for our ISM PMI. But as Purchasing Managers Index, again, these are the folks that are buying all the raw goods that go into the manufacturing service sectors. Our numbers, a little bit of a miss here, coming in at 59.2 for the manufacturing, expected to be 60.5, and a beat on services. We are more of a service sector here in the United States, so we beat on our number, coming in at 58.2, expected to be 55.3. So nice beats on those. We got a little bit of an upside move here in equities. I'm trying to share my screen here. All right, there we go. Crude oil, a little bit higher today after yesterday's sell-off. Got a little bit of a recovery here, but I have to think that this is a bit of a topping here. Yes, we do have inflationary worries that can drive a commodity like crude oil, but the lack of demand, I think, is going to be the overarching headwind here. Manufacturing numbers did come in better than expected. I'm a little bit surprised that they were as strong as they were. So that is going to hold on to this, but I don't know if we can hold on to $80 for very long. Something to note, California, I just saw $7.50, folks, for gasoline. It's up around almost close to $4 somewhere, some parts here in Arizona. So gas prices really starting to jack up here. Bonds starting to make that move after finding the bottom. You know, one thing we're going to keep an eye on here is this value area low right there at around 157 is going to be the thing we're going to keep an eye on, holding on to that handle. I do expect us to start creeping a little bit higher based on what I was expecting for more of a slowdown here. Today, getting a little bit of a boost means interest rates are slightly coming off, just albeit a little bit. Gold futures back up into the 1800 handle. I'm expecting gold to continue to push higher as inflation looks like it's here to stay. Folks, they've been saying it's transitory, but I'm telling you right now with wage inflation that we're seeing here, that is going to cause inflation to stay here for a little bit longer. Why? Because if you're paying wages higher for the employees, those employees will then spend that money, and that money going back into the system is what creates inflation, right? If more and more people are getting higher and higher wages, then they can afford more and more things, and that drives inflation because then we're all competing for those same products, and the higher price is what drives that, or the higher wages and things like that will drive that inflation. And I think that's exactly what we're going to see. If we start seeing inflation, gold should start moving higher here. Bitcoin, a bit surprising because I'm expecting Bitcoin, Ether, some of these other cryptocurrencies to act very similar to what gold is, especially with the devaluation of a currency. That's what everybody is touting these cryptocurrencies for, is when these monetary policies really start kicking in and that inflationary drive because they're messing with the currency. That is exactly why folks are touting these cryptocurrencies. VIX is coming off. That's because we're getting a bit of a push to the upside for the most part in the equities. Dow Jones actually made another all-time high today. NASDAQ is going to struggle. Why? Because we're seeing across the board all of these the folks that are in the NASDAQ for the most part. We saw Intel come out with worse than expected earnings. I think they're down over 10% right now. They're clamoring about the chip shortage. So those folks are going to be driving the NASDAQ down. And this is going to be that situation where we start seeing those rotation into some of those blue chip stocks as they are more of a safe trade. So risk off type of trade going on right now where folks are taking it out of the NASDAQ. It's a higher risk trade, more volatile, and putting the money to work in here in the Dow Jones Industrial Average with some of those blue chip folks. All right. E-mini S&Ps made an all-time high yesterday in the index. Now, those folks on TV are not talking about the futures. We can see we haven't quite made that new all-time high in the futures right now, but very, very close and probably going to get punched in today, late in the afternoon, as we start to see the volume start to dry up a little bit. I think you're going to see a push to the upside in the Dow Jones and in the E-mini S&Ps, while we'll start to see some weakness going on, continuing probably in the NASDAQ. All right, so the trades that I'm talking about right now are in Las Vegas Sands. You guys know I did this trade for the earnings. They did come off a little bit here on that. So I'm going to be looking to roll out of my short puts in here in Las Vegas Sands. And I had sold the October, what was it? The October, what did I sell? The October 39 puts in there for about 39 cents. Those are in the money right now. I'm looking at trying to start to sell some covered calls in the further duration months there in the November, which is the monthly. Remember, these October are in the weekly that I did for the earnings trade, but looking to add some covered calls in there somewhere around the 41, 42 strike in that November month with 28 days left to expiration. Lower my overall cost basis, create a covered call strategy on this. I haven't done anything yet. If I can see this start to pull back just a little bit, I might just try and get out of these for a scratch, which is right around 32 cents. They're trading double that right now. But if it comes out, I'll get that real quick theta decay, just probably another 70 cents higher maybe. I could probably get out of these for close to a scratch there. So that's what I'm going to be looking to do later on. I'm going to be playing that. I don't know exactly when that's going to happen, but I'm pretty far away from it right now. So I'm not going to do anything. If it's looking like it's going to be in the money, folks, maybe I'll probably try and come on a little bit later today and talk about that. What I'm going to do is get out of the 39 puts for a loss, go out there and buy the underlying outright in the open market, and then add the covered calls to it. I don't want to go through the assignment process. All right. So I'm going to try and roll that into the trade and take a loss on the futures, buy the underlying lower cost basis on that. Stay mechanical. That's what I'm trying to teach you folks, is how we stay mechanical when we have a trade that looks like it's going to start becoming a loser, how we lower that overall cost basis in order to turn that trade around. All right. So follow me on that for there. Also, smash that like button for me before you go. Facebook is one of those things really getting crushed today. Facebook and Snapchat. Facebook is off the beat of Snapchat. Snapchat saying folks aren't advertising. Well, one of their biggest advertisers is cars, right? And with those cars not having chips, well, they don't want to advertise a car that they can't actually sell right now. So some of these automakers, other folks are pulling back. Snap also said the new iPhone rules for advertising have really hurt their business. So that's another aspect that was a headwind for them. So Facebook is falling based on Snapchat's real miss today on those earnings, and all of that had to do with the headwinds due to this pandemic and some of the other rule changes going on in and around their space. So social media getting really beat up today, and I would say risk off on these guys. I would start looking to get out of some of these social media names if you haven't already, or at least start becoming more mechanical with these trades and start looking to lower your overall cost basis with some covered call strategies, folks. All right, that's it. That's all I got for you today. I'll pop in here later on today and talk about that Las Vegas Sands trade. Might be late in the day, close to the end. So make sure that you guys have that subscribe button hit. And there's a little bell right next to it. If I'm popping in here unannounced, you guys need to have that bell lit up in order to get that notification that I'm on here right here and now. All right, that's all I got for you guys. If you can't take that, take it easy. Have a great weekend.